Hello and welcome to this new section on practical accounting skills in this course, Finance and Accounting Fundamentals. So, in this particular lecture, in this particular section, we will talk about in depth about what are the practical accounting skills and how can you do that, what you need to do. And we will start by talking in this lecture about bookkeeping, right? So how do you think you can do bookkeeping? There are two parts of bookkeeping. One is to systematically document financial transactions and then maintain general and subsidiary ledgers. So how can you do both of them? We will talk about in this lecture. So how to systematically document financial transactions? Any thoughts? So to do that, you typically follow a structured approach to ensure accuracy, consistency, and compliance with accounting standards. And what are the various steps that you need to do? Let's take a look at that. So first you need to identify the transaction, determine what kind of transaction has occurred, whether it is sale, purchase, payment or receipt. And then you collect the relevant details such as date, parties involved, amount, the nature of transaction. Then you gather supporting documentation. You collect all necessary documents that support the transaction, such as invoices, receipts, contracts, purchase orders, and bank statements, and ensure that these documents are accurate and reflect the transaction details. Then you classify the transaction. You determine the appropriate accounts, assets, liabilities, equity, revenue, expenses. You remember? That will be affected by the transaction, and you classify the transaction under the current account category according to the chart of accounts. Right. Then what you need to do is to record the transaction. You record the transaction uh, by in the general journal as a journal entry specifying the debit and credit amounts for the affected accounts. And as we saw, debits and credits for every transaction are the total amounts that debits and credit must equal to maintain the accounting equation. Example, if company makes a cash sale of $1,000, you debit cash because cash is coming in, and you credit sale because that's going out, right? Then you post to the ledger, transfer the journal entry information to the general ledger where each account's transactions are compiled. And what does this do is it helps in summarizing the activity for each account, making it easier to prepare financial statements. Then you reconcile accounts, periodically reconcile the accounts to ensure that the recorded transaction match the supporting documents and bank statements, and you resolve any discrepancies found during the reconciliation process. Now, wherever you use software, the posting to ledger and recording the transaction happens by the system automatically. You don't need to do manually. These two steps can be done through a software concurrently. Then you prepare the financial statement, use the information from the ledger to prepare the financial statements like income statement, cash flow, balance sheet, and the statement of retained earnings. And you ensure that all transactions are accurately recorded and classified before finalizing these statements. Then you review and audit regularly for accuracy and completeness, conduct internal and external audits to verify that the financial records comply with the accounting standards and regulations. And you store all the financial documents and records in an organized and secure manner for future reference and maintain them according to the legal and regulatory requirements, usually for a specified number of years, 5 to 10 most likely. And then you update and adjust as needed periodically the financial documentation process to reflect changes in the accounting standards, business operations, and technology, and make necessary adjustments of entries if errors are discovered after recording. So by systematically documenting financial transactions, you can ensure that your financial statements are accurate, compliant, and useful for decision making. And this process also helps in tracking the financial health and performance of the company. So that's how you can systematically document financial transactions. Now, let's take a look at the second part of the bookkeeping of maintaining ledgers. So how do you maintain ledgers? There are two types, general ledger and subsidiary ledgers. Now, to maintain ledgers, that is both general and subsidiary ledgers, it is important to follow again a systematic approach, and that ensures accuracy, completeness, and organization. Now, what are the steps that you need to do? So, first thing is to set up the ledger, right? And in that, you set up the chart of account, you create a chart of account which lists all the accounts. So, chart of account is a list of all the accounts used by the company, and these accounts are categorized into assets, liabilities, equity, revenue, and expenses. And you actually create these accounts. If it is software, you create them. If it is manual, you create a manual. Then you assign account number to each account in the chart of accounts for easy identification and sorting. So you assign account number. And then you enter the opening balances for each account at the beginning of an accounting period, if you're beginning for the first time. And which usually would be, if your business has been going on, you will transfer it to here. Otherwise, if the business is starting, it will be zero in most cases. Then you record transactions in general ledger, and there are a couple of things that you do. Two things: you make journal entries. You start by recording all financial transactions as journal entries in the general ledger, and each entry should have a debit and credit entry, ensuring that the total debits equal to the total credits. And then you post them to the ledger account, as we were saying earlier. You transfer each journal entry to appropriate ledger account in the general ledger, and this process is called posting. For each transaction, post the debit amount to the corresponding account's debit side and a credit amount to the credit side. So that's how you post it. And again, as I was saying, in the software, if you're using software, this happens by itself, right? So you make these debit and credit entries. Then what you do is you set up the subsidiary ledgers. Now, so what are the purpose of the subsidiary level is a detailed record that support the balances of the general ledger's control account. Common subsidiary ledgers include accounts receivables, accounts payable, and inventory. And then these subsidiary account, you set up these individual accounts within each subsidiary account for each customer, vendor, or inventory item. And the total of all the individual accounts in the subsidiary is linked to the general accounts, and the total of them should match the balance of the corresponding control account in the general ledger. So you set up these subsidiary ledgers and link them to general ledger. Then you record transactions in the subsidiary ledgers, where you record detailed transactions for each customer, vendor, and inventory item in the respective subsidiary ledger. For example, record sales invoices and payments for in the accounts receivable subsidiary ledger. And then you update the control account after recording the transaction in the subsidiary ledger. Update the corresponding control account in the general ledger to reflect the total balance. And then you reconcile subsidiary ledgers with the general ledger, and you regularly reconcile the balances in subsidiary ledgers with the control amounts accounts in the general ledger, and this ensures that all transactions have been accurately recorded and the ledgers are in sync. If you're using a software, this happens unless there is a mistake. This happens on its own. Then you identify discrepancies, and if there are discrepancies that arise during reconciliation, you investigate and correct those errors in either the subsidiary ledger or the general ledger. So that's how you maintain these ledgers. The last two steps are to close accounts at the end of the period, where at the end of the accounting period, you close the temporary accounts, revenue and expenses by transferring the balance to the equity accounts, retained earnings in the general ledger. And you prepare financial statements, use the balances in the general ledger to prepare such financial statements like income statement and balance sheet. And obviously you maintain accurate records on an ongoing basis, and there the two things you can do is one, or use audit trail. Keep an organized audit trail by maintaining all supporting documents like invoices, receipts that correspond to the ledger entries, and then periodically review the ledgers for accuracy and make necessary adjustments to correct any errors or discrepancies. So as mentioned while talking about earlier in this lecture, you should be using accounting software. It's a good practice to use accounting software because it does many things. It automates the posting. These are between the general ledgers and subsidiary ledger, and this reduces errors and simplifies reconciliation. So a lot of work gets simplified. Also, it does the reporting and analysis. You can leverage the reporting features in the accounting software to generate real-time reports and perform financial analysis. So life becomes a lot more simpler by using an accounting software. You don't have to do those manual postings and transfers, and you get reports out in a jiffy. So maintaining ledgers involves recording, classifying, and reconciling financial transactions accurately. The general ledger provides a summary of all accounts, while subsidiary ledgers offer detailed tracking of specific accounts such as receivables and payables. The regular reconciliation between the general ledgers and subsidiary ledgers is important, crucial for ensuring the integrity of the financial records. So what is next? So we have been talking about reconciliation. So we will take a look at the reconciliation in the next lecture. So thank you so much for watching this first practical accounting skills lecture in this course, Accounting and Finance Fundamentals. I hope you continue to learn new things, continuing to enjoy. And I do look forward to see you again in the next lecture. Please feel free to message me if you have any questions. I'll be happy to answer your questions. And do download the PDF file to take a look at anything that we talked about.